Hey, good morning. Hold on one second. Let me get this off. This is that tick range chart I've been talking about. All right, let's go to the charts. Can you guys hear me? Let me just make sure I check on that. Hey, there we go. Okay, good. All right, let's go to the charts here. As it got to that area, did have a system trigger, although the fill price was, I'm not sure if it's fast market conditions or whatever, but it was supposed to trigger at 40, right? 46 or 47, got filled at almost 48, almost 49. But that's the area where you would want to be looking to get long based on what we said earlier on. That's under the band, and that's looking to hold that higher trend. Here's the daily 4 hour, 1 hour. Still struggling though. It's not breaking out. You can see on the 15-minute we got pretty extended. We're above that top band, so that's an area. If you were long, I would have to say you'd want to trim most of your positions now. Crude had they have this other firm that does. They actually use lasers to calculate the crude inventory in all these different places, and that was right in this spike up. I guess it must have shown a bigger draw, but you could see now this is definitely bearish price action because we've had yesterday's news, which came out and was bullish, a larger draw than expected, meaning reduction of inventory, and the market sold off, and then same thing again today. So but it's also that same, it's been creating this megaphone, higher highs and lower lows. So we'll see if it pushes down to this 58 half area. I'm sorry, 59 half. Let's go to the 15-minute. Just had a decent sell-off. Kind of held that support area. Looks like almost to the tick. Went a little bit below there yesterday, or overnight actually. Just trying to see where everyone's at. Eduardo, you look like you're chipping away. What are you guys trading, Eduardo, Jerry? What product? NASDAQ, okay. Eduardo? You could just answer in the chat box, or there you go. Yeah, S&P, okay. Good, that's two different ones. So we'll work on both of those then. NASDAQ is it's pretty strong, so I think what we want to do is wait for a pullback into the maybe, this band is rising up, so if it maybe pulls back to 57-ish, it'd be the area that you'd want to look for. Trying to see, I mean, there's even a chance that it's turning and making a move. So we'll go to a 1 minute chart. See what I mean? That was that same area on a 1 minute as the 5 minute. But we've got kind of this flagging formation. If it can take out here, could definitely test the high. If it fails around here, then there's definitely a shorting opportunity that's worthwhile to take. We'll see if it gets that. You ideally want it to fail before taking out this number. S&P, probably what I'll do in the future is that in the first hour, if there's a particular setup, I'll just jump on the mic. It's probably just better for me to just jump on the mic and say it's go time versus waiting for a certain specific time, because right now trend's definitely up. It's the 1 hour. It's pretty extended on the 15 minute. It's midpoint on the 5 minute. Usually this pattern tends to try and be a blow off top, possibly, because that takes a lot of energy out of the market, a lot of volume that had to come in to get through that. So right now the S&P is kind of stuck in that area. I think we'll just go to the 1 minute just for the sake of the trying to get some trades in there. Get my S&P chart. It's still loading. So there's the 1 minute S&P. You can see 5 minutes ago, basically right here at 09 was a buy. It's on the neutral point, so it's kind of a When I look at percentage chance, I'd say that's a lower percentage chance. I'll just put the S&P down here. But I still would pick that as an anchor price. So basically, I just put this mentally in my head at 09. If I can get a better price and it holds down here at 06, 07, and then starts to come around, that's a better entry. Let's look at the NASDAQ. It's a thing, had its move and now it's flatlined. But definitely what I do is I stick with the trend. The trend's still up. I think it's going to push for a high. You know, looking at here, if it were to break below the 63 on the NASDAQ, that's probably might get a move down to 60. It's a game of patience. Wow, look at that. That's like the perfect that's basically the perfect pattern double bottom. You know, around in here. Were you guys long or short, or both, in your trades? You guys short on the open, okay? And Jerry was both. Yeah, it definitely on that sell-off. That's that morning flush that we get lately, either the super spike or the flush. Um, I just stick with the bias of the trend. Can you catch a short in there? Sure. But to me, it's just a matter of what I'm looking at the trend is, and I'm just waiting for that particular area to hit. But it was definitely decent down move. Everyone has their own style. A lot of guys love that trade. So I think that you know, it's kind of almost a personal preference. I knew a trader that I sat with that he pretty much 90% of his trades were short. So in stocks. So it's pretty nutty to always be shorting. But that was his style, so that's what he was able to do and capitalize on. I'm just going to look at crude because I think it is at a decent spot. You know, it broke down. It's bounced pretty good already. You know, it broke both these lows. It should have brought out sellers and didn't. So 5 minutes seems to be holding. Let's go to the 1 minute. Yeah, it's still got to hammer out its bottom here. Ideally, I'd like it to see it sell off, hold, and not make a new low, and then catch the turn. See if that's the setup here. Stock market's very when you see it in a large, I mean, it's a daily for 6 months. So when you see it in that kind of basing pattern, here's the 4 hour. You seem to lately get these moves, and then it's just quiet period. Not sure what to do. Let me switch this. I'm going to go 5 minute on the S&P, 1 minute on NASDAQ. So I think 64 is a good anchor price on that, and then the 09 on S&P. This is it, definitely in what I call no man's land. So the idea of this is it's right in the midpoint. So it's actually at equilibrium. You get to extreme areas, it gives you an actionable trade that allows, either mean reversion meaning coming from outside the standard deviations to back to the middle, or underneath the standard deviations back to the middle. Obviously, you can see when the trend is up, the mean reversion is faster in the direction of the trend versus when it hits it. Took forever and ground, and actually did it based on time, not on price. So if you got short, let's say here at 03, by the time it hit the midpoint band, it was 02, you made 1 point, versus if you bought here when it broke out, it's 95, the midpoint is 98, you made 3 points. And obviously it went further. So you could definitely see the difference in that. We're fighting the trend versus with the trend. With the trend, you get paid right away. So sitting in this range is kind of just quiet, but it's definitely building up some energy to make a spike higher. I'd like to see if I can get along at the 64 area. It's a more aggressive trade, but crude did that test and held, so that's a pretty decent area. This is what I've been talking about, though, where you get that move on the pre-market, and then it's kind of like sleepy time. So Eduardo's that's a combine, right? So you're just keeping it. Do you have a daily goal or anything on dollar amount? You've already hit it, or wait for another trade maybe? Real good setup. Let's see if this crude can hold. Oh, okay. Yeah, I mean, you definitely look at short-term goals. It's kind of like getting a report in college or something. You got to write a 30-page paper. You really don't want to go the night before and write a 30-page paper, although we've all done it, right? So ideally, you like to get in there and do a little bit of it at a time. Some days you're, thanks, Jerry. Some days you're on fire and do 5, 10 pages, and some days you're just it's a struggle to make a paragraph. So same thing in trading. It's like writing a college thesis. So we'll see if this can hold in that area. Pretty neutral across the board on the systems trade. See crude at 59. Dollar's starting to rally a little bit. You could see the euro selling off, and then the yen's upticking, starting to give the stock, especially the Nasdaq, some push to the high. Now it's dragging down crude. Just literally trickling up. That's actually pretty bullish, that type of price action. It's just slowly building steam, and then it'll have a spike. Make a new high up to 70, looks like. And here we go. Just traded 69.75, almost 70. These are about a tick off this chart. So here's the actual tick price of 69.75. So you're at this tightest time frame. I'm starting to get the rate of change to roll over, so I don't expect a big 10 point run right now. Probably drift higher. Crude not doing another retest, which is like we said on bottoms, you'd like to see it bounce a little bit harder. This came back and tested. It never took out that high, so it's almost like a failed bottom. Now we've tested the low. We'll see if it can hold. It's not looking too hot. Let's step back. 5 minute. Kind of near that day low. Doesn't look so bad there, but when you step back on the 1 hour, Just feels like it's going to that 59.5. You could see how it got rebuffed by that band, showing the strength of this uptrend. You got to be more patient on it. So you're not buying breakouts into that red band. Here it's just outright down. Same here. Back to leaning short on the crude oil. That's a very aggressive trade long at 69. I didn't have my act together. I should have got long in this 64, 65 area. Because that's an arrow that gave an anchor. You know, you look at well, if you try to enter at 67, you have to kind of put a limit of what you would, as I call it, chasing candles. What would be your maximum amount of stretch to get that? So you would have gotten, if you just left that trade in, you'd get filled right now at 67. But I've always felt you want to get filled on the way up, not on the way down. In most instances. This one, I think it's just gonna, it's drift mode, so. It'll work back and forth. Yeah, I find on the ladder, you know, you want to do a market order, you just click up here. That's a market buy. Instead of clicking here, you might miss it. What you want to see is have the price action now continue, like you need it to print a new high here. A lot of times if you get in a trade and it's down right away though too, and you feel like in a bad spot, you can almost break even on this one and enter at a lower price at some point. S&P, you see how you got to catch the open because it's stuck at the 09 for, it's like flatlined. Starting to get the euro to bounce up, and at the same time the yen is rallying. That sometimes is that's the euro yen carry trade. Sometimes that's the big push higher now. Yeah, look at the yen, it just took out its high. Because you're in an aggressive spot, you could almost start putting your stop in at 67. If this went back down to 67, I don't know. I think that upward move is pretty much done. you get a big spike, I would sell into that. Just a big spike meaning above 70 maybe, 72. I can't see, it's off the chart. We'll go to the 5 minute. Actually, there's not a whole lot of overhead here, so could go to 72, 73. There you go. I'd see if you can get 73s. So just a little slow on that. Just, you would click here. See if it gets one more push. There you go. Chip, chip. So we got out 72 and a quarter, so good trade. It probably, if you had multiple lots on, you take off one where you did and you keep this as the next one for the floater trade. When it gets like that, there's no overhead supply, so there's nobody that bought here, like when you have other areas, so probably goes to the top and 75-ish. The floater trade. Let's see, did you also buy Eduardo? Looks like you made a point. Let me move this out of the way. Went from 09 to 10 and a half. That's sometimes the frustrating part with the S&P. But it also shows that that's probably the end of this current move on the 1 minute, because the S&P didn't really get going. So that's where you go watching different things for correlation. You know, you could just stare at the NASDAQ chart all day, but you need an edge because everybody else has one. And they typically spend millions of dollars of building that edge. So that's why you need to have some tools and different things to help you get beyond that. But the thing is, when you go and spend $1 million on a trading system or information flow, things like that, that get you to that point, what's the odds of you turning that thing on and it took 6 months of development, $1 million? What's the odds of, what's the odds of you saying, oh wow, it didn't work for a couple weeks or a month and I'm done with it? You're going to hold on and you try and get that thing to work for many, many months and may cause you to have losses. So that's why when I like to have the flexibility, when you see like on my trading systems, where are you at, Mr. Trading Systems? Yeah, good job, Eduardo. It's a little bit slow, but let's let it get full. So this is professional style institutional trading software that most of these firms use. They have their own proprietary stuff. They don't use MetaTrader. They don't use other systems. They use their own. I call it the homebrew. But um, typically, a developer to build an application usually have a team. There's 2 or 3 guys that start out, maybe even a project manager. One guy does the GUI, which is what you're looking at. I don't really care too much about that, so it's not that big of a deal. So, sorry. So basically, this is the GUI, which is the graphic user interface. You're able to, like I said, you have buy and sell systems. These are the systems actually running for the ES, NQ, and CL, the old crude oil. So sorry, I have to take care of that. Okay, so those are for the trading systems. You have the buy and sell systems. You have multiple systems, and then when you go under the hood, so this is the code for, these are all the variables, and then this is the code for, it's multiple threads, so there's 5 threads going at the same time. So if you imagine juggling 5 balls at once, that's what this program can do. One is getting the data, one is creating the algorithm, another one is checking the algorithm, one is trading, one is changing the stops, one is changing the targets, etc. So there's a lot to it when it comes to it. All your calculations of the algorithms. So you're taking the data. I create my own bar charts, so I use my own data and create my own bar charts. Gets a little crazy. I mean, I have program after program. This calculates all the different algos. Lots of math. All your arrays, those are for all the bars, the open, high, low, close, etc. So there's a lot to that. So when you have all those different trading systems, you can take that. That's my own system, and basically it's the arrows. And then I have other systems that are not on here, but it's all programmed on there to be automatically traded that way. Boy, this thing is really... Nice out, Jerry. We'll call you top tick. Got out right here. It's basically the high bar. You can never pick the top. You can never pick the bottom. You just want to get in. I always like to get in late and out early. Very easy way to make money. Don't have to overcomplicate it. Once you identify a move, see where you are in the trend, identify it, put the trade on, take it, you're done. It's almost like just shut it down. Because what happens from a trader's perspective, especially newer traders. All right, I got some casino chips, so let me go and I'm gonna get short now. And then, you start having that. I get short, and then starts going back up, and I'm now long, and then next thing you know, you're like, oh, that money I made on those couple trades it's pretty much gone, and you end up being down on the day instead of being up. So I always thought of it as being a tiger in the woods, and you're waiting, and you jump on your prey, and you're going to just eat, and you're done. And what are you going to do? Go back and hunt again? Not for a couple days. So you really wait for that right setup. You jump out at the sick deer going by that's limping, and you got yourself some easy money. You could see how that S&P didn't participate and how it's now breaking down. Like it never went up and broke down, so it's breaking below that anchor price or it's at that anchor price versus S&P with the anchor price was at 63. We're still at 68. See the difference? This arrow. I believe that was this arrow. So we're at the same price now, or even below that second arrow, versus here we're much higher. So there's still some bullish divergence there, but we're extended. I mean, look at a 15-minute. We got above that top band, so that's why I didn't think it was going to go 10-handle scoot. But 3 is good enough, right? So what I'll do is I'll get on the horn, as they say. If I see an actionable area, it's just easier that way. More fun anyway, more profitable. And then this way we could even trade it together. You can even see like this time of the day, it's almost back to market making, stuff like that. Crude is starting to get compelling here. Keeps printing little new lows and then it bounces. So if it was going to waterfall, it would be really breaking down. Could be an interesting spot to get in long again. Much more risky because of the price action where it made that high and fell apart. You could see when that first arrow hit, this was sloping up. Now we're going to possibly get another arrow, but we're starting to hook down. So I would assume that whatever bounce we get will be a lot less. See if it can get going. Okay. This S&P just keeps dragging lower, so see if it can hold here. Usually when that candle fails on the blue arrow, that's gonna be rough. We'll see. We'll see if we can get you out at break even, or if it can hold here. I mean, it really has to hold this candle. If it makes a new low, then it's kind of a failed pattern. Got to put it in perspective of winner, winner, winner. This winner, this one's going to be a harder trade for sure. We'll see if it can hold this low. It's a good spot. It's just the time of day. This is 11:17 in New York. Well, you can. Okay, so you gotta. That's fine. I mean, you cut it quick. It's just you gotta kind of let it play out its thing here off that band. I would think it's gonna. If it got up here, it would fail. That would be the most you'd get out of it. So we'll see. I get it because it does, but it always seems that it's these opening moves, you know. This time of day we don't get the big plunges lately. So I think the way to combat the nervousness of being in a trade is have your plan, execute your plan, military precision, and not have to worry about, you know, saying, well, the market did this or market did that. If you get in a trade, you have your fixed stop, and then you don't have to worry. You know, use your OCOs. So you put auto OCO on. So when you put a trade on, I have mine set at 5 points, which it'll say 500, but that's 5 points. So your profits, if you get filled on a trade on the ladder, your profit target is 5 and your stop is 5. That's pretty tight. I mean, this time of day, that's okay. The morning, I don't know if you could do that. You got to go to 10. Yeah, patience is definitely the name of the game. But if you get in a trade and you have a stop at whatever and you have a reason why getting a trade, then that's kind of the idea of letting the particular scenario play out. Sometimes I like to get in at a price and then get a better price too. So if you got in and it sold off a couple, and it's kind of that back and forth style trade, I think at a better, like this is World Series of Poker, this is 70%, this is 60% chance. So I don't know if I would do that strategy, but if you got in and you took a little heat, you got in another one, it came back, you sell at that original price, so now you've got a better cost basis. So you bought at 68, goes to 66, you buy another one at 66, it goes back to 68, you sell one, now you're still long one, but you bought it at 66 because you scratched that first one, you bought it 68, sold it at 68, and then the second one you bought at 66. So now you're long at 66, it's trading 68, you're up 2, you're in a much stronger position to be able to trade this out if it were to go and make a new high. If this were to break down to a new low, you'd just bail at break even and no risk. So to me, that's kind of when I had risk-free trades on, that was pretty much all I did, but running the hedge fund. Get in, get that quick pop, take take some off, break even, stop. Um, that's all. That's all I got to do. Just keep doing that. The market starts to go your way, you take your shot, especially like over here. You get in at certain levels. So tomorrow I'll have for the pre-market. We did have the numbers, so there's a lot of numbers today, and tomorrow there will be too. So I'll probably switch to the 1 minute for tomorrow. And try and get some trades and trade alongside with you. So just don't make me do a bad trade. See if we get the S&P to turn. There you go, Eduardo. Another little winner. Just keep chipping away. You could tell the blockiness. I mean, this is a 2-point, not even a 2-point range. So, but this time of day, it does get range bound. You could, buy 8, sell 9, or even make 2 ticks. I do like, the Bollinger play, especially when it's flat. So you could buy, you could either buy here, sell the midpoint, sell the second half at the top. So that's about a point, 2 points. Then you can get short. Took a 3/4 of point heat, then it fell apart. You made 2 points. That would be scalping. Oh yeah, it's going to definitely be your fault, Jerry. No, this is trading is a very fluid thing. There's no fault in it. There's no, I think from a mental psychology standpoint, you have to look at it like it's almost like a video game. Because if you sat here and I personally don't even really look at the P&L. Right. I think there's a way to get rid of it. I'd like to get rid of it. It's probably in the properties, but I actually have I don't even look at the ladder too much. I have it tucked off to the side so I don't even see it, and then it's covered under my charts. So I don't know. This seems to be excuse me. This seems to be holding in here. So slow as molasses, but I always liked the band coming up and hitting the price action from underneath. It's almost like a trampoline, and then the 1 minute bars were turning down, and they're now starting to turn. The red bands are starting to turn up. So let's see if we can get a trade here. Still more aggressive than here because that's the first push and the first sell off. This was the second push, second sell off. This could actually be even a third. It might even be done, but this is still a decent pattern. You make most of your decision based on P&L. Not a good idea. I would highly recommend removing the P&L. So have your ladder hidden under something. I don't know. Make it small. hide the P. Let me just see. There's got to be a way to get rid of this. There you go. No more P&L. If you get nervous watching the P&L, you make all your trade decisions based on the P&L. It makes you do dumb things. Trust me. You can get rid of it. And then you might want to have your your net, like your all accounts P&L, maybe somewhere so you could see to make sure you're within, because you don't want to be like, oh, I'm just in a trade, whoop-de-doo. You want to make sure that you're not hitting any combine issues. I know it might be difficult, but just do it in your practice account. Get used to it. Like I said, when I ran the fund, I could not watch it. I couldn't watch the $10,000 swings. It was just like, get me a bucket. And sometimes on certain positions, you'd have, in per tick, it was like thousands of dollars per tick. So imagine upticks 1,000, another 1,000, down tick up 1,000, down 1,000. It's just drive you crazy. Once it's starting to get going here, I think you go to break even now if you got in that area 30.68. Waiting to get in a trade with no P&L, right? God, everything is so flat. No, it's more of like I said, use the anchor price. I'm getting in at 68. That's your price. You got in before at that level, whatever. So now as it went to 73 and then you sold and then now it's come back to 66. I always keep, oh, I got in at that price. Let's see the price action at that anchor price. Let's check out crude. It's a nice bottoming pattern. I like to see it beat this 60-10 area out. Get it going up to 30. Stock market, I think it's in meander mode right now, so. You can remove the P&L from the ladder by, you go to properties, which is this little hand. You go to accounts, and then you can do P&L, which is your total P&L or your unrealized. Whole $5. But we'll get a move in the afternoon, so, and I think crude is kind of setting up. So we can see. We'll see you on the wrap-up call, and then for tomorrow, I think whenever there's an opportunity, we'll get on it. I'll just get on this for whatever amount of time, get you guys going. Good job, Eduardo. I think for the rest of the day, the bias of the market probably is going to be either flat, it might even be down. Just been lately so tough in this time of the day, just drifting. You'd probably stay in this range, 2105 to 11. Drift higher. Probably close around here. Drifting trade, so you gotta be patient. Crude, I'd like to see, I mean, as it broke down like that, it totally should have totally should have fallen apart and didn't, so we'll see. All right, thanks a lot. We'll see you in the wrap-up call.